Hello traders, Jeff with optionboxer.com. This is going to be a very quick video, or at least my hope is that it's a quick video because I am battling a cold right now. So I will try to edit out any sniffles or sneezes or coughs from the video, but just know ahead of time I am sorry for that. You can probably tell by the way I sound that I am in fact suffering a cold. That being said, I had a viewer request a Fibonacci extension analysis. So I'm going to try to do that just briefly. Of course, before I do, please know that this is not a recommendation for you to buy or sell any security. This indicator, as well as any other indicator, is not flawless. It will fail you. So just know that nothing's perfect, and it needs to be used in conjunction with a thorough analysis of your own choosing. So you can see on the screen the disclaimer, and just make sure you know what you're doing before risking any money, or understand that trading can lose you a lot of money. All right, so what we'll do here is I've got the E-mini S&P pulled up. We'll take a look at this downtrend, and then at the same time we'll take a look at this uptrend. So we'll just go ahead and see what this downtrend may do if it were to continue down. So we can see right here it's in between a pretty wide range between the 0 and the 50% line. There's actually a 23% line in there somewhere, and if I just don't have it shown on my screen because I don't use it as much, but you can see that 23% line has been very important. It would probably be somewhere about right in here where price has continued to fail over and over again. So my initial feeling about this is that this price is going to pull back down into this 50% line around 26.27, just based on the Fibonacci extension, and assuming price is going to go lower. So let's go ahead and just overlay the Fibonacci extension to the upside over that. So now we can identify some key levels. Let's go ahead and get a drawing tool, drawings, so we can identify a couple of critical levels here. So that right there is an interesting level. You've got the 61% line on the uptrend and the 50% line on the downtrend, kind of converging there. This is also an interesting level. And then up here at the top, this is an interesting level. So we'll highlight those, and we'll delete any of these, delete the rest of these fib extensions because they kind of clutter up the screen. So we can see here that we've got a pretty wide range. In fact, if I was trading this market, I might think an iron condor would be a pretty nice trade, just because you do have this wide range, and it would not surprise me if we got back into some of this range bound movement. If it does go down, I think it may find some brief support here, and then it may end up finding, ultimately it may end up finding support right here. This particular area is also in line with these lows here, and you can see the only time price breached that, let's see, 1, 2, 3, maybe 4, 5, 6 times, 7 times, and it just did not want to stay below that. But at the same time, price right here where it's at now, it's 1, 2, 3, 4, 5, 6 times, 7 times as well. So you've got this thing kind of stuck in a rut, so to speak, and you can use fib extensions or Fibonacci retracements to help you identify that area. So if it were me, I'd probably think about an iron condor trade, but you know, this thing is very likely going to pull back, maybe in line with this 200 moving average, or all the way back down to where those two fib lines were kind of in agreement with one another, and that also happens to be kind of a nice support level there. So you may get a bounce up here, and then it may end up falling back down to this level, but that's kind of how you can use fib extensions. Honestly, I don't use them all that much. I use Fibonacci retracements. I think mathematically they're calculated the exact same way as Fibonacci extensions, or I'm sorry, Fibonacci retracements. But fib extensions just kind of work the same way in reverse. So if you understand fib retracements, you should have a pretty decent grasp of fib extensions, and that's why I don't really use them that much, because I can do the same thing with a fib retracement. So let me remove those, and we'll go ahead and get the fib retracement. So typically we would look at it right there. We want to analyze that downtrend. We want to see how far it's going to pull back. Well, if you wanted to use the fib retracement kind of in as a fib extension, you would just do it the same way in reverse. So it's kind of found its ceiling there at the 23% line, and if it extends back down, however many standard deviations, it could reach some of these levels down here. It's the exact same indicator as the fib extension, just you work it the same way, just in reverse. Hopefully that made sense. Again, I apologize. I am heavily medicated on Benadryl, so I am a little bit, cloudy, groggy at the moment. But hopefully that answered at least some of your questions. If you have any more, feel free to reach me at optionboxer.com. Thank you.